All right, so today we are going to be looking at some stuff about crypto leverage trading.
Okay.
Specifically, we've got some articles here from FXSI.com, and these articles are from 2025.
Gotcha.
And they talk all about how to manage risk when you're using leverage and also kind of how to navigate this crazy market that we're all in.
Cool. Yeah.
Yeah, so I'm excited to kind of pick apart these articles with you and see what kind of nuggets of wisdom we can glean.
Yeah. Sounds good.
Yeah, so leverage can be kind of a scary thing.
Uh-huh.
You know, it can really amplify your gains, but it can also really amplify your losses. So
Right.
we've got to be careful.
Yeah. Definitely a lot of people approach it with the wrong mindset, like, oh, this is how I'm gonna get rich quick.
Right.
And that can be very dangerous.
Yeah, that's not what we're about here.
No, not at all.
So let's assume that we all kind of get like the basics of leverage.
Yeah.
You know, that it amplifies your gains, it amplifies your losses.
Yeah.
Um, what is it in these articles that really kind of jumped out at you about using leverage wisely?
Well, the first thing I notice is that they really focus on the psychology of leverage.
Yeah.
You know, you're controlling a much larger position than you actually have capital for.
Right.
And that can really mess with your head.
Right.
If the price moves a little bit against you when you're 10 times leveraged, it feels like a huge move, even though it might just be a small dip. And so you're more prone to make like a bad decision in that moment.
Right. You panic sell.
Right. Exactly.
Yeah, and it's interesting because I've noticed this in my own trading. Like when I'm not leveraged,
Uh-huh.
if I lose $50 on a trade, I'm like, oh man,
Right.
whatever. But if I lose $500 on a trade because I was leveraged, even though it's the same percentage loss overall,
Yeah.
it just feels way
Of
worse.
course it's $500.
Yeah.
It's real money.
Right.
So that's a big part of it, is understanding your risk tolerance before you even think about touching leverage.
Right.
Can you ride those swings out, or are you going to panic and sell at the bottom?
Yeah. Yeah. So self-awareness is really important.
Absolutely.
Okay. So the articles also talk a lot about stop loss orders, which I feel like that's kind of standard advice.
Right.
But what's the nuance there when we're talking about leverage in terms of stop loss orders?
So the nuance is where you set your stop loss order,
Okay.
because when you're using leverage, you have a lot less wiggle room.
Okay.
And so they recommend setting a stop loss based on your overall portfolio risk, not just a percentage of an individual trade.
I see what you're saying.
Yeah.
Okay, so like if I normally risk 2% on a trade,
Right.
but I'm 5x leverage, that 2% loss is actually a 10% hit to my portfolio.
Exactly.
Oh, that's painful.
Ouch. Yeah.
So I should probably change where my stop loss is to reflect that.
That's a good idea.
Yeah. So maybe I should only be risking 0.5%
Mm-hmm.
on a trade if I'm 5x leverage
Exactly.
to keep my overall risk consistent.
Right. And that's a hard thing to wrap your head around, because you think, oh, 2%, that's my rule. But when you add leverage to the mix, you gotta adjust.
Totally.
Yeah.
Okay. And they also talk about liquidity,
Yes.
which again, I feel like is kind of basic knowledge.
Right.
But they stress it even more with leverage. Why is that?
Well, it's because with leverage, you're often dealing with much larger positions.
Right.
And if you're trying to get out of a trade quickly on a coin that doesn't have a lot of liquidity,
Yeah.
you know you're going to have problems. You're not going to be able
Yeah.
to find enough buyers.
Yeah. Right.
And you're going to have to sell lower than you want.
Yeah. And then that gets multiplied by the leverage.
Exactly.
So sticking to the big guys like Bitcoin and Ethereum is even more important when we're playing this leverage game.
Yeah, higher liquidity means smoother exits.
Makes sense.
And that's crucial when you're leveraged, because you're so sensitive to even small changes in price.
Right. Okay. So risk-reward ratio,
Yes.
another kind of basic but very important thing.
Fundamental. Yeah.
But tell me something new about risk-reward ratio when it comes to leverage trading.
Well, the interesting thing they point out is that your risk tolerance should actually dictate your profit target when you're using leverage.
Okay.
Most people think, okay, 1 to 3 risk-reward ratio, I'm going to aim for 3x profit.
Right.
But if you're somebody who gets really anxious with risk, maybe you need to go for a 1 to 5 or even a 1 to 6.
Wow. I never thought about it that way.
Yeah, because you're amplifying the risk.
Right.
So you also need to amplify the reward to make it worth it.
Yeah, that's a great point. And I can see myself falling into that trap, where I'm like, oh, well, normally I'm fine with a 1 to 2 risk-reward ratio.
Yeah.
But if I'm 5x leveraged and I'm like freaking out about it,
Yeah.
maybe I do need a much bigger reward in order to justify taking that risk.
Right. You need to be comfortable with the level of risk you're taking on.
For sure. For sure. Okay, so we've covered kind of the mindset stuff. We've tweaked the basic risk management tools for the leverage world.
Uh-huh.
What else jumped out at you from these articles that somebody who is considering using leverage should know?
Well, they say something that I think a lot of people miss, which is leverage isn't for every trade.
Okay.
It's a tool to be used strategically, not just a constant setting, on your dashboard.
Now we're getting into the good stuff.
Yeah.
I'm all ears. So when does leverage actually make sense?
Okay, well, they give some specific examples, like when you have a very strong signal,
Okay.
like maybe a chart pattern that historically has a very high win rate, or you're really confident in a specific news event,
Right.
that's going to move the price of a coin.
Gotcha. So it's not just like, oh, I feel lucky today, I'm going to use leverage.
Yeah.
It's like, I've got a really solid reason to believe this trade's going to go my way, so let's amp it up.
Exactly. Leverage works best when you're already tilting the odds in your favor.
Gotcha. I like it.
Yeah.
Okay, this is making me think about leverage differently already.
Yeah,
It's not just about the games. It's about using the right tool for the job
for sure.
and being really honest with myself about my own risk tolerance.
Right.
Really good stuff.
Yeah. And we haven't even gotten to the specific cryptocurrencies
Yeah.
they recommend in here for 2025.
I know. I can't wait to get to that.
Yeah.
But first, let's just take a second to really let all this leverage wisdom sink in.
Yeah.
This is the type of stuff that can really separate, the reckless gamblers
Uh-huh.
from the serious traders in the crypto world.
Exactly.
Love it. All right, so we'll be back after a quick break, and we'll dive into those cryptos.
Sounds good. Okay, so we've been talking about how to use leverage without completely, blowing up your account.
Right.
But there's this thing called liquidation that we need to talk about.
Yeah, liquidation sounds scary.
Yeah, it's kind of like the crypto equivalent of margin call.
Uh-huh.
Like the exchange is basically saying, all right, we're cutting you off before you lose everything.
Right before I hurt myself or hurt them.
Exactly.
Yeah, can you break down how that works, like what actually happens?
So let's say you're using leverage and the trade starts going against you.
Okay.
And your margin balance drops below a certain level, the exchange is going to step in and just automatically close your position.
So it's not just that I lose the trade, it's that the exchange closes it for me at, like, potentially the worst time.
Exactly. And because of the leverage, that loss is magnified.
Right.
So you can lose a lot more than you would have if you hadn't been using leverage.
Ouch. That's a good reminder that even with stop-loss orders, things can still go wrong.
Yeah. It's like having an airbag in your car. It's a great safety feature,
Uh-huh.
but you still don't want to get in an accident.
Exactly.
So while we're talking about specific strategies, let's talk about those cryptocurrencies that the articles mentioned.
Yeah, those top crypto picks for 2025.
Right, because each one of those has its own unique risk profile.
Uh-huh.
And that's important to consider when you're thinking about leverage.
Okay, so obviously we got to start with Bitcoin,
Of course, the OG.
the legend.
Bitcoin.
But with all these new exciting cryptos out there, is Bitcoin still a good leverage play in 2025?
Well, they still see it as a store of value, like digital gold. It's not going to be as volatile as some of the newer cryptos.
Watch it.
So it might be more suitable for someone who's new to leverage and wants to kind of dip their toes in the water.
So maybe not the most explosive potential, but a little bit safer?
Potentially. But you have to remember, even gold has its price swings.
Right.
And, institutional investors are getting into the Bitcoin game now.
Okay, so don't be lulled into a false sense of security,
Exactly. Bitcoin can still move.
especially with leverage involved.
Especially with leverage.
All right, so next up is Ethereum.
Yes, the merge finally happened.
Ethereum 2.0.
Proof of stake is here.
And it sounds like from these articles that 2025 is when it's really starting to take off.
That's what they're predicting, yeah.
So how does that upgrade change the game for leverage traders?
Well, it makes the network more scalable. It's more energy efficient
Okay.
and potentially, less prone to those crazy gas fees that we've seen.
All those like crazy spikes.
Exactly. So it can make the whole experience of trading on Ethereum a lot smoother and more predictable.
So not just about the tech upgrades, but like the psychology of trading might change as well.
Yeah, maybe less panic selling because of high gas fees.
Right.
Less fear of getting stuck in a trade.
Right.
Of course, there's always the risk that something goes wrong with a big upgrade like that.